One of the folks that's been around for a really long time and a really good friend of the station is Murray Wise. He's with Murray Wise Associates. You might know him better as the founder of the Westchester Group out of Champaign. Oh, hi, how are you? And they and Murray have done a great deal of farm management across the United States, Australia, California, some other places, but Murray probably has as good a handle on what's happening in the farm marketplace as anybody. We're really glad to have Murray Wise back. Give him a nice warm welcome, please. Murray?
Thank you, Todd. It's a great privilege to have the opportunity of being with you here again this year. A year ago, I scratched down some brief notes as I prior to visiting with you, and I stumbled across those notes in the last couple of weeks. A year ago, I gave you the conclusion right up front that my conclusion was it was a time for caution and a time for volatility. And those are probably some of the most accurate comments I ever made, because I think the last 12 months has been a time for caution, and certainly from a commodity point of view, a time for volatility. I also, a year ago, shared with you a story about an investor friend of ours by the name of Dennis from New Jersey, and I'm going to take a moment here in a couple minutes to share with you an update regarding my friend Dennis. Again, a year ago, I made a comment that this is not a bubble. Even today, I still believe this is not a bubble, if you will. By the same token, and as was demonstrated by our soybean panel this morning, it's certainly a time that we've experienced some dramatic volatility in the grain market, and in my opinion, we will continue to experience some dramatic volatility. Again, a year ago, I shared with you that one of the key factors within the farmland market was, in fact, a lack of sellers, and that has, in fact, not changed. Today, I think we have a two-tiered marketplace, and I'm going to make some comments that are probably going to cause some stress for a few of you, but I would guess that in 20% of the Midwestern townships, not counties, townships, the farmland market is as strong as it's ever been and will continue to be so, depending upon who the major buyers are in those individual townships. By the same token, in 80% of the townships across the Midwest, and again, this is my speculation, but I really think it's pretty accurate, we probably have experienced a 10 to 20% adjustment downward. And I'll give you an example of that in a few moments. And we certainly have seen, number one, a significant number of auction no sales in the past probably 90 to 120 days. But again, we've seen some very, very definite lower prices within the farmland marketplace. But I reiterate, in my opinion, that it is not a bubble. It's simply an adjustment. Again, it's not many months ago that we had, $6.50 plus corn. Today we have a little over $4.50 corn. That creates a major economic adjustment, to say the least. Going back to my friend Dennis, the investor, the story I told you a year ago was in early February 2013. Our friend Dennis had instructed us to attend a 280-acre auction. And one of my employees called me the night before and said that Dennis had given us authority to go to $14,000 an acre. And I said to our employee, John, I said, that farm's not worth $14,000 an acre. So I called my friend Dennis in New Jersey, and I simply said to him, Dennis, I think you're being overly aggressive. I think $12,500 would be the maximum value for that individual farm. Dennis said, Murray, I got the money in the bank. It's earning nothing. I want to buy that farm, go to $14,000 an acre. And I shook my head in sort of disgust. And then the next day, the 280 acres sold. We never got to bid once, and it sold for $17,000 an acre, to show my lack of knowledge, to say the least. And again, I was shocked at the price this 280 acres sold for in less than 5 minutes, I might add. Well, in early February 2014, approximately 3 weeks ago, another 80 in the same township came up for sale. And it was a little bit of an unusual auction in that you had to submit a letter of intent with a minimum bid of $11,000 an acre, and you had to put a $25,000 check with the offer, and then 3 days later, you would be invited to attend the auction. We contacted Dennis again, and he said, yeah. He said, I really want to get that 80. I have a lot of land in that same township. He said, bid the 11,000, put the check with it out of my account. And he told us to go to 14.4, were his instructions this time. And again, I shook my head. Well, we submitted the letter of intent to the auction company on a Monday. They had to be in by 4:30. And we got a call from the auction company at 4:45 saying that they would drive the offer to our office the next morning at 10 because we were the only bidder. So in that one particular case, we went from, again, 280 acres selling for $17,000 an acre to an 80 selling for only $11,000 an acre. So we have, in my opinion, experienced a fairly major adjustment in a relatively short period of time. Next, I want to talk about the positives of the land market, and I want to talk about next the negatives of the land market. The positives are interest rates. I mean, I never dreamt that we would be able to secure long-term financing on quality agricultural land or agricultural land with a number starting with a 3. On the flip side of that, deposit rates are drastically low. And again, particularly those that are on fixed income have really experienced a major adjustment. And the deposit rates, whether it's offered by a local bank or a brokerage company or T-bills or whatever, deposit rates are frighteningly low today, which again are positive, relevant to a lot of people wanting to move capital still into the land market. Globally, let's look for a second at the Swiss government bond. The 2-year Swiss government bond has a yield of minus 0.09%. In other words, you give them $100,000, you buy $100,000 worth of Swiss government bonds. When they mature 2 years down the road, you don't get your whole $100,000 back. I mean, what a crazy set of circumstances, in my opinion, to say the least. Another positive, again touched on by our astute panel this morning, is the Asian appetite for the commodities that most of us here in the room are involved in growing. The appetite is still very, very strong and very, very positive to land ownership, in my opinion. I believe it was Kurt that touched on California and the rains that they've had in the last week. California is a positive to us Midwestern farmers on the basis that, contrary to what Kurt said, the rains of the past week are nearly irrelevant. The California water comes from snowpack in the mountains, and that's the driving force. There is no water district in the state of California that has beyond 0 allocation of delivered water for 2014. California is a major disaster, which could be very positive to Midwestern agriculture, in my opinion. When I was CEO of Westchester Group, we farmed a lot of acres in California, and our average water costs were $70 per acre foot. Again, 1 acre by 1 acre by 12 inches. Our water cost us, on average, $70. A water district in California that has a fairly substantial amount of stored water 2 weeks ago put that stored water up for bid. My former company bid over $800 an acre foot to get some of that water. The water district that owned the water canceled the sale in the middle of it. Paramount Farming, a gigantic farming operation in California, had bid $1,150 an acre foot. To put this into context, you need 3 acre feet to grow a wheat crop. You need 3.5 feet to grow a grape crop. You need 4 acre feet to grow a almond crop. Again, to pay $1,000 an acre foot and need 4 acre, the economics just simply don't work. It is projected in the San Joaquin Valley that there will be 500,000 acres not planted in 2014. Again, this will be cotton, wheat, corn that will not be planted. And that is a major factor that we need to keep our eye on, to say the least. Another positive within the current land market is the amount of capital that's still readily available from the global pension industry who all wants to enter U.S. agriculture. Again, a gigantic amount of capital, to say the least. From a Farm Bill point of view, again, contrary to what I would be able to say a few months ago, we at least have a Farm Bill. I'm still perplexed as to why in the Farm Bill there's a significant amount of capital being spent on policies for cockfighting. Yes, I said policies for cockfighting. Why that would end up in a Farm Bill, I have absolutely, totally, completely no idea, but at least we do have a Farm Bill. As we look at the negatives, looking at farmland values in 2014, first and foremost, and again, as touched on by our astute panel this morning, would be grain prices. Where are grain prices headed? Again, there's good arguments for higher prices. There's also some very good arguments for lower prices. And again, I think this would be very stressful from a farmland value point of view. Next, if you look at the net farm income in the U.S. in 2014 is projected by USDA. Again, they're projecting a 30% drop in farm income, and if in fact this is reality, it will be, again, very stressful from a farmland value point of view. If you look at grain bases, particularly outside of Illinois and Indiana, but if you look at a place like Fort Dodge, Iowa, a year ago, or at least last summer, they had all summer a 30 to 40 cent positive basis in a grain market that historically was 20 to 40 cent negative basis. Again, there was a point in I believe, September before corn harvest got started where the grain basis peaked at over 60 cents above the Board of Trade price. Another negative, which none of us like to think about or talk about, again, relating only to those of us who own land in Illinois, is the state government in Illinois is a real mess. And are we going to have higher property taxes? Are we going to have, again, we have high enough state income tax, but are we going to have even higher state income tax? Again, the state of Illinois is something that all of us need to keep our eye on, if you will. Again, one of the panel members this morning mentioned inflation. Inflation is something that I expected would have ratcheted up greatly prior to now. It hasn't, but again, as the panel member suggested, I believe on a go-forward basis, inflation is something that we not only need to keep an eye on, but will in fact impact us. Again, if anybody wants to come up and take a look at my example here, which I'm going to share with you in a second, in Zimbabwe, they have a dollar bill. And in Zimbabwe, they have a $100,000 bill. In Zimbabwe, they have a $200 million bill. And in Zimbabwe, they have a $50 billion bill. And you're welcome to come and look at these. In Zimbabwe, they have a $10 trillion bill. In Zimbabwe, they have a $100 trillion bill. Now, I do not need security to leave this building. I'll tell you in advance, in that I read about the Zimbabwe dollar in the Wall Street Journal and found out there was a broker in Connecticut who dealt in this money. And in my little packet of money, and I have way more than I've shared with you, but in my packet of money, and I'm sure he made a profit, the Zimbabwe dollars cost me $43 US. And that's the type of thing, not to that degree, I hope, but that's the type of inflation that really could hurt America long term. And that relates to why owning a farm is not a bad investment in my biased opinion. We have much lower cap rates today within agriculture than we've had historically, and I would project that these cap rates will in fact remain low. One other item kind of off the farmland value that I want to share with you, and Kenny, would you be as kind to pass these out and pass these back to the table? Here are two different pictures, and they relate to the Horizon hobby display back here, and Horizon didn't even know I was going to do this. But I believe one of the things that will become commonplace for auction companies, for farmland brokerage companies, and quite frankly, large farmers, is to own a drone. And you're sitting there saying, why in that world would I want to own a drone? Well, these are pictures that were shot by our drone of a vegetable farm in Florida this past week with the help of Horizon. You will be able to take a drone, you'll be able to put in the coordinates for, let's say, a quarter section. The drone will fly that quarter section, shoot movie footage or still pictures of that individual farm. So you know you have a wet spot back in the northeast corner of a quarter section. After a big rain, your drone literally will fly back there, take pictures of the wet spot, and you'll have it on your iPad or computer. Drones, I think, will become very, very commonplace within agriculture. And I realize they don't relate to farmland values per se, but I think it's something that will be very, very common on a go-forward basis. I would also like to take a moment to recognize someone who passed away within the last year, and that Barton Biggs was the chief economist for Morgan Stanley. In 1986, I believe, was the year. Barton wrote one of the best papers I've ever read, and it was titled "Buy a Farm and Get Rich Slowly." And the principles within that paper still hold today, and it's something I get out once a year, once every other year, and reread. It's so interesting, if you will. By the same token, in summary here, I would say that, like what I shared with you a year ago, I believe it's still a time for caution. I believe it's still a time where we will have grain price volatility. I think as we look into the future, cash rents in 2015 will be very interesting and very challenging, quite frankly. Potential for a major adjustment, in my opinion. But eventually, we will have higher land values. Yes, we're in a modest adjustment phase today, in my opinion, but again, on a go-forward basis, we will have higher farmland values. It might be 3 years, 5 years, 10 years down the road, but eventually we will have higher farmland values, in my biased opinion. And with that, Todd, I'd like to throw it open to a few questions, and I know my good friend at the back, Paul Cooley, will have one for sure, so let's start with him.
All right, Paul, you're up.
Murray, it's always fascinating to go to a Murray Wise auction. Is it better to hire Murray Wise to buy the farm before it's sold at auction, or is it better to let Murray Wise sell it at auction? And the last question is, the old guy that waits before it's sold, is he still the smart guy in buying the farm at auction?
Repeat the questions for me. So the question is, is it better to hire Murray to buy the farm for you, or before the auction, is it better to hire Murray to buy it at the auction, right?
And is it also, do you wait till the last farm at
And do you not worry about it and get in at the very end of the auction when you buy?
All the above.
As long as Murray makes money, it's good.
True.
Other questions for Murray? Yep.
I'm interested in your thoughts on international land values. What
Oh.
are you seeing in South America?
Yeah. Okay, so the question is about international land values, particularly South America and Australia. And Zimbabwe. Anybody else got another country? Ukraine, but they don't sell property, so okay, we can do that.
That is a great question, ma'am. A great, great question. First of all, for TIA-CREF about 5 or 6 years ago, we went to Brazil to do a study of land values. And I have to admit, we came back from Brazil frightened to death. There are so many restrictions. There are so many environmental regulations. If you have a farm employee, you have to feed them 3 meals a day. They have 28,000 inspectors who come around in these little cars and inspect whether you're feeding your employees correctly. Brazil is a very, very difficult place to do business. And yes, they're much lower land values than we have here in the United States, but again, it's a very frightening set of circumstances to farm down there. We came back with the recommendation that TIA would do a joint venture with a Brazilian company, which is what they ultimately ended up doing, and that's how they acquired the land that we acquired for them in Brazil. Flipping to Australia for a second, Australia is much easier to do business, but it's also very challenging to do business, and it seems like at least once every 3 years or once every other year, there's a major drought occurs, and all of a sudden you go into your farming operation for the year and you've got a given budget, and all of a sudden you find out that instead of having X bushels of beans to market, you have half of X, and beans are not a big Australian crop, but certainly oil seeds and wheat and to a smaller extent corn, few almonds are major crops. But internationally, there are mega challenges. I don't think those of us here in the United States really appreciate, particularly in the Midwest, what a great set of circumstances we have, where most years we have decent rainfall, we have great soils that have a water holding capacity. So internationally, I'm not a big fan of, quite frankly, as you've already detected, on the basis that there are a lot of challenges that we are just not accustomed to here in the Midwest. Great question.
Where's your favorite place in the United States to buy land?
Well, Todd, anywhere in the Midwestern states that have high-quality soils, I mean, Illinois, Indiana, Iowa, Minnesota, as I think you know, I have the largest percentage of my land ownership in the state of Iowa. And that's just because I think that 4, 5, 10 years ago there were better values in Iowa than there were in some of the other states. But I personally own land in both Indiana, Illinois, and Iowa, but the largest percentage in Iowa. Southern Minnesota has some great ground as well.
Have you, or will you consider selling any of it?
Not 1 acre.
Other questions? Yep.
Do you consider the possibility of any kind of deflationary action taken by policy?
Yes.
Possibility of deflationary action based on a policy decision out of Washington, D.C.
First of all, your question's a great one, but first of all, I don't think any of us here in the room are in a position to predict what's going to come out of Washington. Yes, it's possible. Yes. Yeah. But I think the deflationary action, if it, in fact it would occur, would first hit commercial real estate, residential real estate, and then maybe farm real estate. But I doubt that it will get to farm real estate. But deflationary action is definitely possible. And do I think it'll occur? No, but there's a 5–10% chance it might. Good question.
If a person had some extra money in savings and mutual funds, would it be a good time to take it out now, or wait a couple of years when land prices would probably be less because grain prices would also be less?
If you're thinking about buying property and you have excess cash, for instance, that's stowed away in a savings account or a mutual fund, would you move it into property, real estate, farmland now, or wait until we've suffered through what USDA has said, lower prices over the next several years?
Again, you're asking a great question, and a question that bothers me every month, because through various entities that I'm involved in, very partnership entities, children's trusts, etc., I have more than 10 accounts at Charles Schwab. Every month, when I get those statements, the cash is earning 0.02%.
Yeah.
And why any sane person, hopefully me, would have money on deposit for 0.02%, I don't understand. And I'm reflecting this on myself, okay? And yet, on that cash, I should be out buying a farm today. But, you know, and it doesn't matter that it might be lower, in my opinion, 2 years from now. I mean, to put that money into something solid, and again, when you talk about mutual funds, my friend Dennis, who I've referred to, he's one of the 5 largest mutual fund managers in the world. And he's buying farms. Does that tell you his attitude to your great question?
There was another question back here. Where was that?
Right over here, Todd.
Oh, sure.
Yeah, so from what I understand, there has been quite a bit of profitability in pistachio, walnut, and almond farming in California. And I know that pistachios in particular, granted, the price per acre of farm ground is quite high, and so the investment would be large. But how do you feel about, for families of high net worth, perhaps investing in in one of those crops in, or trees in California?
So the question is buying farmland nuts? Oh, no, that's not actually the question. The question is, if you have the ability and you're a high-income family, would you invest in farmland that produced nuts, for instance, almonds, pistachios, and such?
Again, as CEO up until late 2010 of Westchester Group, we were the third largest almond grower in the world. And we made a lot of money for our clients investing in almonds. We were also in pistachios. We're also in wine grapes, another favorite crop of mine. With this California water situation today, I would run. I would not put a dime because, again, the uncertainty is unbelievable. Even on most of our properties, we had two sources of water. We had well water and we had delivered water. In 2014, they're going to get zero delivered water. But the well water is shrinking at a rapid rate of speed, 30 to 50 feet a year. And wow. I just could not personally stand the risk. My wife and I owned a vineyard in California, and we're very pleased to say that in late 2012, we sold that vineyard. Accidentally, it was a great decision because today I would be scared to death because we're on that vineyard. They will get zero delivered water unless there's gigantic snowfall yet in the month of March, which you certainly cannot predict. But again, what's going on in California, what's going on in the western states, what's going on in Texas makes Illinois and Indiana look like a pretty neat place to be right at the moment.
Just on water being used up, to the south of Muhammad where I live, and I live on the Muhammad Aquifer, we just don't go dry, relatively speaking, but they put in a water plant for Champaign, and I'm on a well in town, and it happened to get struck by lightning. At least that's what they told me from insurance, and I wasn't worried about them paying for a new pump. When they came to put it in, the guy who had been hired to replace that pump said he had been hired by Ameren, I think it was, no, North American Water Company, to replace 30 farm wells in the area because there was a sink now. The usage would be so great that those were going to run dry. My pump was down 120 feet, and at that point he said it only had 5 feet of water above it. He said that's not going to be enough, and he stuck it down another 20 feet, so he dropped it 140. So water can go away really quickly depending on what's happening in the area. I had a question further back in the back. Where is that? Somebody there? Yes, in yellow. Oh, you're going to have to speak up. Yell it, please. If interest rates come back to 6 or 7%, what happens to land values?
Number one, they'll be under pressure. And that, in my opinion, is a major factor, if you will, relevant to land values as we look out 3 to 5 years. Definitely would have a major impact. Percentage-wise, I'm not smart enough to give you the answer to that, but I am maybe smart enough to tell you it will have an impact. Great question.
I live in Indiana, and the real estate taxes have skyrocketed the last 5 years. And also, when you started the meeting, you mentioned that you had some bad news, maybe land prices going down 10 to 30%. Well, I think most of the farmers in there, including me, that want to buy land. That's good news. So, could you comment on that?
That's, number one, absolutely correct. It's good news for those of you who
summarize the question for me.
Yeah, so, he made the comment that property taxes in Indiana have skyrocketed. He and I are going to have an argument here in a moment. But he also mentioned that it's good news for people like himself who are interested in buying land, and that's definitely the case. For those of you who are in the land market, again, it being off 10 to 20% is good. But living in Indiana, you don't understand what skyrocketing property taxes are. You come over and be with us in Illinois, will you? $25 to $35? What do you pay?
Well, of course, I own some hybrid, but it's down in there. It's around probably $50 maybe.
Bare land?
Well, I have to check that to be sure, but I know my taxes went up from a small amount to a big amount.
Well, I have a farm near Kokomo, and my Indiana property taxes are a third of what my property taxes are in Illinois. So, anyway.
One final question. Anybody got one? Right there. Yep.
In the area, how do you see the progress or progression of monies through the tenant farmer back to the landowner?
How do I see the progression of capital returning from the farm through the tenant back to the landowner? Number one, a very volatile situation and a very difficult situation on the basis that the landowner over the last 5 years has asked for more and more money, quite frankly. I think going into 2014, the rents I'm hearing of are very, very difficult, and I don't know, quite frankly, how the tenant is accepting that burden. But again, the percentage of revenue from the farm going to the landlord has just got higher and higher, and quite frankly, I think it's reached a crossroad where it's unreasonably high, in my opinion.
So cash rents will have to go down, or what will happen?
I believe cash rents will go down looking in 2015. I think as a result of insurance checks and other factors, Todd, in 2014, rents remained very, very high, but I believe they will go down. It would be my...
How much do they have to go down?
15 to 25%.
$60. Okay, I had to think about it. Yes.
At what point, if income goes down on the investor side, cash rents go down, at what point would they disperse their land holdings? Would it become unprofitable for them to, or less profitable, and they would actually liquidate them?
So the question is, if cash rents come down and they're not earning as much, at which point would they decide to liquidate or sell the property?
First of all, and these are Illinois numbers, but first of all, in Illinois, keep in mind that the farmer is buying between 75 and 80% of the acres that come for sale today. The investor is currently struggling with your good question, okay, on the basis that they've already come down to a level where the investor is having trouble rationalizing the decision. That's why there's so much pent-up capital from particularly the pensioner or the institutional investor today that's sitting on the sidelines that wants to buy but will not accept, say, a 2.5% return. But again, if we would see values ratchet down where the institutional investor could get a 4.5% return, we would see a lot of land being bought by the institutional investor. Good question.
The question was, would they liquidate?
No.
They're not going to liquidate.
The question is, will they liquidate? He says no.
Right.
Yeah.
No.
Okay.
Thank you.
One final question. We've got, a few more than 300 people in the room. Let's say they own 200 acres apiece. That's probably, on average, not bad. I would think that. So we have, 600 million represented, roughly speaking, a bit more than $500 million. How much is it worth 2 and 5 years from now?
2 years from now, it'll be worth the same amount, maybe 10% lower. I'm going to stretch here 5 years to 5 to 10 years. It will be worth 25 to 50% higher.
That's good news. Thank you so much. Give Murray Wise a nice round of applause.